Welcome to the December 2025 housing market update. It is unbelievable. Another year has passed. We're going to talk today about how home sellers are setting prices too high and it's costing them money. That's the theme of today's housing market update. We're going to drill into some details, but let's first take a look at the news. The news kind of mirrors what I'm talking about. If you just go to Google and you type in housing market news, these are the headlines that you're going to see. The great housing reset is coming. Income growth will outpace home price growth. Home prices are poised to dip in 2022, U.S. cities next year, in 22 cities next year. Map reveals cities where home prices are falling fastest. Housing market will warm up in 2026. This is contrary to what everything else is saying there. What will next year's housing market look like? So on and so forth. So there is some conflicting opinions, but I think what you're going to start to see in the stats that I'm going to show you right now is that there is some ambiguity out there. And I think there's a general consensus that things are generally going to change. I don't think that there's any question about that. We who are realtors in this marketplace all feel the change coming. We're in it. Houses aren't selling as fast as they were. All right, so this is a relatively small data set, relatively speaking, because it is ultimately just Orange County, New York, Sussex County, New Jersey, but it gives a good, overall sampling of what's really going on out there. You can see here that new listings are up a touch. They've kind of been up a touch all year long. It was about equal in terms of Sussex, to where we were last year this same time. So listings are increasing. They're increasing faster in Sussex County than they are in Orange County. We're not going to take a look at the raw data numbers because I want to keep moving here for you and don't put you to sleep. But just know that they are increasing faster in Sussex County than they are in Orange. Units sold. This is, I've been saying this as long as we've been doing the housing market update. Units sold is the most important metric of any housing market that we're in because it tells how many transactions are happening, right? Let's not forget the U.S. housing market represents roughly 18% of GDP for America. So when homes are moving, the economy is bustling. When homes are not moving, it's a real, negative drag on the economy because so many things are tied to homes going through transactions to new owners. So you can see here, this red line has pretty much been lower than every month this year. And yet again, on this in November, it was a tad lower than it was in 2024. So we are in a low transaction environment. There's no question about that. So if you're a professional tied to the transaction, a real estate transaction, just know you're in a tough market. Some agents are having their best years. Great for you. A lot of people are not. Fear not. Better markets are coming. As price begins to shift and inventory builds, the number of transactions is going to pick up. So that's the silver lining here, is that as prices begin to cool off, we should start to see more transactions, which is ultimately good for buyers and good for the professionals in the arena. Average sale price, you can see it's cooling, right? Just take a look at the third quarter of last year, right? Look at the variance between 23 and 24, how much of an increase there was. It really sailed after August and stayed significantly higher. And look at the lack of a variance here in 25 versus 24. It's almost even in November to where it was this time last year. So clearly prices are cooling, but they're not dropping, right? You can see that every bubble here on this line is above the previous year's line. So prices aren't necessarily declining, but the rate in which they're increasing is slowing. That's basically the answer on prices. And this just shows you more evidence. Days on market, is climbing. In other words, it's taking longer for homes to sell. The last metric here is the sold to ask ratio. And this one is also important because it shows how many homes are selling above 100% asking. And this is really a remarkable set of data. I mean, You know, I've been tracking this data for 20 years, and there was never a time where, you know, it was over 100% for that long. I mean, you can see all the way back to 2019, which was a great, robust market. It was a very good marketplace. And, you know, the average, on average, you could negotiate 2 to 3%, maybe 4% off the asking price. And then, you know, the pandemic came in and it just hit hard, you know, away from there. So you can see in 2025, the red line was above 100% for every month except for October and November. So that's another sign that things are cooling. There's just not as many homes selling above asking. Okay. The next thing that I want to show you, I broke down a couple Wall Street Journal articles, and this is what I said at the beginning, is that, you know, when home sellers set prices too high, they're paying for it. This is the breakdown of the article. So 57% of homes sold in 2025 had at least one price cut. That's 3% more than you saw during the years of 2020 through 2024. So more price reductions are happening. It's clear. Overpriced homes linger due to high mortgage rates and economic uncertainty. Sellers often anchor to early 2020's booms prices, but today's the market is different. The best practice recommended by the NAR economist Jessica Lotz is that, you know, you need to base your price on neighborhood comps, meaning you got to listen to your realtor, right? It's really important. It's one of the hardest things for us as realtors to talk about with our sellers. If, you know, the house isn't selling, we're not getting any offers, you know, the discussion that has to happen is that, you know, you got to make an adjustment in price, because if you don't, it's just going to languish and going to linger, and it's only going to cost you more in the long run by just allowing your days on market to increase. And, you know, a lot of times sellers have good reasons to not drop their price, because maybe they don't have to sell, maybe they could consider rental as an option, so on and so forth. But in general, you have to listen to your realtor, and you got to give them time and space to be honest with you, so that you have the real advice that you need. 20% of active listings in October cut prices. That's unbelievable. That's a huge percentage. So that's also a sign that the market is cooling. There's no question about it. Homes with price cuts spend 5 times longer on the market and sell for 3.7% below ask. So I'm not going to sit here and read every single bullet point. The next thing I want to show you is this graph here, which is telling. Okay, so this is average cumulative price cut between listing and sale by days on market. So on average, 0 to 7 days, there is no price cut, or if there is one, it's very small, right? But as you go to 35 to 40 days, it's 2%. 60 to 70 days, it's on average over 4%. If you get to, you know, close to a year, you're going to end up having to cut your price 10%, right? So it pays to really spend time up front when you originally go to list your home to make sure that you're pricing it competitively. There's no question about that. Okay. The next thing I wanted to show you real quick is, why is all this happening? Well, this to me is really the bottom line. And this is why inventory is building, because quite frankly, a lot of buyers can't afford it, right? So this is a look at the affordability chart that many times I will show you here on the housing market update. I like to come back to it every so often just so that you have perspective on it. But what you're seeing here is that basically orange is unaffordable, blue is affordable. And this line is kind of like an average line, right? So everything above that line is really unaffordable, right? So you can see that back in 2005, 7, and 8, when things were, the last time things were just like at a really high pitch in the marketplace, and it was just like, you know, things were flying. It came way down and it became very affordable for almost a 10-year run, right? And then the pandemic hit, and now all of a sudden things got out of control. Interest rates popped up, prices went up. It's like, you know, housing's just become unaffordable for most people, and it's a shame. But you can see it is leveling off. You know, when you look at the peaks of, you know, 23, it's a little higher than that of 24, and 24 is a little higher than that of 25. So it is cooling. We'll start to see if it, you know, comes back down to the average line. But that's the issue, you know, is that there's not enough buyers that can truly afford today's prices, including the rates and the taxes. So it's a problem that ultimately time is going to have to solve. All right. I wanted to also mention that I have a little bit of a gift for you. This article here, I'm a Wall Street Journal subscriber, and I have the ability to send a link around that's a gift. If you click on it, you can take a look. And I'll show you where to claim to get it, to the link. But this is a really neat article that's like interactive. And you can see, oh, geez, it logged me out. I can't show you the interactiveness of it, but it's a really cool article about how office towers are being converted to residential conversions, and how New York is the epicenter of it. And it shows you some very interesting case studies in New York and how they're literally like restructuring buildings. You can see here in this image that they're literally carving out space from this building here and putting it on the back so that they can allow natural light in and the plumbing systems can work and all this, that, the other thing. So it's kind of like, if you're interested in engineering and real estate and that's of interest to you, it's a really cool article. Where you can find it is you go to our website and you go to our training and events calendar here underneath the 4 BHGR EGT agents, and you'll see today's event, the monthly real estate sales meeting, and on there are links, one of which is the Wall Street Journal office to residential conversion. You can click that link and read the article for free. So check that out. It's a really cool thing. All right. I'm going to bring in Amy Green of Quintessential Mortgage at this point to talk about what's going on in the mortgage marketplace. Very important topic for us. Really the topic, right? Because rates popped up so high. We have a huge variance. A lot of people don't want to put their house in the market because they're going to end up with a rate much higher than they have. So Amy, if you're there, go ahead, speak up, and let's get it going.
So, good afternoon at this point, everyone. Thanks for having me. Jeff, you bring up a lot of really good points. Thanks for sharing the affordability chart, because that really puts a lot of things into perspective, and, you know, everything we have to deal with on a day-to-day basis with most of our clientele. I will make the point, though, that I don't believe it's interest rates that are causing an affordability problem, because, well, I'll share my screen here. Just bear with me. Like I said, low sixes, historically speaking, is a great rate. And even FHA and VA are all floating in the high fives right now. So that's even better. I wanted to also show you quickly what happened this past month since our last meeting at 11/11. We were here and we're basically right at the same spot as of close of market yesterday, right? So that's good news. And the really good news is if you look at year over year from last year's same time till now, rates have actually improved over 1 year. So,
that's interesting.
you know, we're still in a great spot to be able to buy a house. And I think maybe a lot of times, you have to put things into perspective for your clients. I tell my clients a lot of the time, look, I know houses were less expensive back then, but still, in the 80s, interest rates were 16%. And so many people don't even realize that. Once you say that, it helps them get over the fence, so just a thought.
All right, good job, Amy. Thank you for that. And you can release screen share. And one of the things that's worth mentioning is probably 3 or 4 housing market updates ago, I highlighted a gentleman who is the head real estate researcher for Morgan Stanley. And he and some other economists were tracking mortgage interest rates and kind of pegging high fives, right underneath 6, as kind of the Goldilocks moment where this real estate market will unlock itself and transactions will come back. So we are very close. And it looks like the Fed is going to maybe have a rate adjustment coming up, AIM, right? That's what everybody's expecting to have next.
That's the expectation, yes.
Yeah, so that should help things improve. So I don't know. I'm a little bit bearish on 2026. I'm not convinced that we're going to see a major increase in transactions in 2026, but hopefully I'm going to be wrong. You know, it's all about the transactions. We need it to come back for the overall economy, for our real estate industry, so on and so forth. So we shall see what 2026 brings. Thanks again, Amy. Appreciate it.